Yo, 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 let me turn this shit down. Alright. Yo, I saw something this week that I had to share because I learned this like a year ago, and I need to bring it to people's attention. Well, the select few that'll listen. I don't care really about anybody who ain't looking for any type of information. Alright. So, if you've been following me, we know that the GBP has been running up for a while, since the beginning of the year, and before that since December, and that's all as far as we need to go. Let's go to the hour and let's review this week and what happened this week. So this is all the week's range, what happened. Looking at it, I've seen this before and I know this pattern, and I can't believe that I was still trying to go up after I seen this happen. So let's go ahead and break it down. You see, price started the beginning of the week trading in a little area before it broke out of it here. Little area. Oh, I need to change that. And then it came back to retest the range and shot up. Boom. But I thought in my head that I was going to catch more pips going up because I failed to realize something. You see, it got here and I kept trying to take these retests back up, and then price came and shifted downward and kept going down. But I had seen this before when I was studying the market maker template, and you can call it the Wyckoff method. Oh man, feeling kind of weird. But yeah, this pattern happens a lot. And okay, so the beginning of the week it reaches its highs. At the end of the week it drops back down to the area it opened at. And I failed to see this. But here's a basic markup of the chart that illustrates my point, where it reaches a high and a low during some sessions. Okay, so in regular daily cycle, it'll start off in the Asian little area. It'll break up London, come down New York, and reverse back up to the area it was in Asian session during the day. But during the week, it starts off at the beginning of the week trading in a range, going up the rest of the week, and then hitting a high point on a Thursday or Friday, coming back down, trading back to this area. So that's like basic structure. Like price does this all the time. Does this, comes back down. There's reasons why it comes back to this area here. Because during the week, everyone is waiting for a reaction, for a move to happen. So the people who control the market move it a certain way and drop it back down sharp to the area. And they say they do that because if price started here at 147, it's irrelevant, honestly. The people who control the banks at the end of the week, they could say they only moved a few pips over and not so far for costs of managing money and stuff like that. So they'll move it really far and bring it back down. But the manipulation happens all the way up here. How many millions of dollars were here for them to only show on their sheets that they traded from this area to that area? From the beginning of the week to the end of the week, they only moved like a little bit. But during the week, they moved a lot and manipulated and took a lot of money out of people's pockets. But it doesn't show on their sheets of like reports. That's what I was told. It makes sense because this structure happens a lot and happens all the time. And that's the reason why. Manipulation purposes. You see, there's people on the other side of this market that don't want you to win. They want you to lose. And the same people that are on this side have all the money, and they have all the education needed to deceive you. Here's an example. We're here on the hourly chart. So the last 3 weeks, there's been this resistance area for people who trade support and resistance. There's this resistance area that got hit 1, 2, 3, 4, 5. It got hit like 5 times, you know. You know what they say in the textbooks? The people who are deceiving you gave you the textbook. They say the more times a resistance holds or a support, the stronger it is. Right? So it kept hitting it, so it becomes a strong resistance area until it doesn't, and it breaks through. Boom. Comes back down, reversed. You see, this is what it's called an area of human expectation. It doesn't really exist, only in the mind of whoever was taught these things. Area of human expectation. So if you're someone who sets up the narrative and gives everyone the education needed, but you know you're gonna manipulate them, why would you trust these theories that don't even make really sense? It comes to this point, this point, this point, this point, it's a strong, but here it is, it broke through, came back down. What happened? You have been manipulated into believing that support and resistance is a valid structure, you know. You see, there's traps that can be explained, though. I will need to do that in another video. But yeah, why would someone who has all the money to educate the masses, the retail traders that are us, to seed out information like support and resistance, divergence, trend lines, and things of that sort, and give you all the tools needed to win at the market if that's strategies that actually work? They wouldn't. They're manipulating you. They're seeding out misinformation on purpose. There's no reason for them to. That's like giving the opposite team your playbook, you know. Why would you do that? You wouldn't. You would make them believe that, you know, things are going to happen one way and they don't. So I saw this one on Euro USD, this resistance line, and then it broke through it. You see, people would sell off this resistance area, but on the other side of this resistance area is everyone's stop losses. So why not, like a hungry snake, go through it? And here's a valid structure. I'll show you. Perfect example of high liquidity zone here. Price will break this false resistance area and take out sellers. And that is exactly what happened. It was plus 50 pips. Booyakasha. But let me show you the true structure that actually happens. You see, we have a breakout here. Same thing. It comes down only to shoot up. Comes down to shoot up. And in inverse, it stair steps its way down. So those structures are like psychological structures, you know. So they make you believe they're going one way and they go the other. So when you have a ranging market and it dips low, most likely in an uptrend, it'll go up. And then dip low again to take out whoever is buying and scare everyone out their position, only to go back up. That is a valid structure. It's a psychological structure. It's stair-stepping its way because, you know, orders accumulate, and if they're going to move in one way, they're going to drop the opposite first and take out whoever's right and keep going. Drop, go. And then inverse, reach a high, and they do the same thing in inverse. Stair-stepping its way down, eating to get energy to move. down. You see, I ignored this on a Friday. You know, Friday is probably a risky day, but I started a new endeavor, and I wanted to try it out. All right, so we know that price reached a low here. In hindsight, I thought it was going to continue down, but it only continued up with the same psychological structure. And if I missed that one, I got in on another sell here, ignoring my rules of the structure and knowing it. So buy, and then I could have came down and went back up. That was like 200 pips in one day. Yeah, I ignored my structure, but it's all right. Yeah, here's another example. GBP NZD. I missed it. Going there. Checked markets way back down and back up. Hope you're getting this. That one. Oh, I think I got into yeah, it was this one. I saw this one on the 30-minute. And I caught this one here. So see, price was making new lows. So it came back up, boom. And then I waited for this retest of this level here, got in going down. So that was good. 100 pips. I think that was like an $800 trade. But I still lost like $900. It's all right. I'll get it back. But yeah, that was a perfect example of the structure in inverse. And that's all I got. See you on the next one.